try to slow down, but I've been told I move kind of fast. All right, so we have structure looking left, right? Boom. Simply drew a couple fibs in, right? We identified this level. We talked about the risk reward, 5-to-1, brilliant risk reward, worth taking even if it's not a high probability trading opportunity, right? What I did was take a Fibonacci retracement from swing high to swing low. And I said, you know what? Look at that. 618 retracement right there at that level. Boom. 618 is a very good Fibonacci level. The golden mean. The most important one, some would say. Next, I took a Fibonacci inversion. So I took the inside of this last move. You see this last move right here, this inside move? This right there? I took the swing low to swing high of that move backwards and came back down and saw we have 127 confluence as well right at that level. So I have a 127 Fibonacci inversion lining up with that 618 Fibonacci retracement. Bang. Then if we want to get fancy, we can do this. We can go from swing low to swing high here. I think it was this one. And get a 618 there, 1414 there. A little short of a 618, so that's not going to give us much. So I think that's all we're going to have is those two. We may have a harmonic move in here. Hey, harmonic move in there. But now we still need to wait and see. What I'll be looking for is a lower low, lower close type entry. So we had the market reverse right here. I'm not going to be super aggressive, but I was looking for a lower low, lower close. So if this white candle, if this second white candle, and this is going to be white is going to be bullish, black is bearish. If this would have been a bearish candle that broke and closed below, I would have entered at market because that would have been the confirmation I needed. Aggressive confirmation, but still confirmation nonetheless. We didn't get that, so I'll wait and see. And I wish I had more range bar charts up because I want to pay. I'm actively managing this Aussie position I'm in, which is going to be, I hope this thing runs. I'm going to look like a superstar to everyone. Jason pulled in his 220 pip winner. Maybe I can get one of those. All right. So what just happened, guys? What did we just get? Somebody tell me. We're actively looking at this chart. What just happened on our chart? I know it seems remedial, but just, humor me, type it in so I make sure you guys are getting it. Higher high, higher close. So our entry reason at this level is invalidated. We never put the trade on because we were waiting for that little bit of confirmation. We never got it. So what do? We sit back and wait for the next level. You see that? So many traders think that you've got to enter the trade. As soon as you see it, you got to enter it or you're going to miss it, right? Give me a yes. Give me a yes if you've ever been scared to miss a trade. As a matter of fact, yeah, just give me a yes. I don't feel like doing a poll. If you ever thought that, I got to take this trade or I'm going to miss it and it's never going to come back. This is it. Let me just enter right now. That's all emotions. I'm going to say yes too because I've done it. I still do it every once in a while. I just don't tell you guys about it. But yeah. Well, guess what? You guys that would have done that, you would have been stopped out. It's only 10 pips, yeah, but you would have lost an unnecessary 10 pips. We waited for a little bit of confirmation. We didn't get it. We never pulled the trigger, and we saved ourselves some money. All by that simple method, right? Very, very simple, but we saved us some money. And we don't get frustrated. We don't, we reanalyze IPDE, identify, predict, decide, execute. And we spot out our next zone. Okay, well, if the market breaks this level, where's our next structure level at? Boom, right here in this big red box. Let's redo our analysis and see if we can find a reason to enter up there. All right, look at that. Harmonic move will put us right here. So let's scout that out. And I hope we're not missing anything on other pairs, but that's the sacrifice of teaching. You can't pay as much attention to the market as you want. All right, we got a harmonic move up there. Just drew on what? A 1618 Fibonacci extension. Now we use our if-then thought process. If price action gets to this level, then we wait for A, B, C, D, X, Y, Z to happen, and we enter. So we reload, we sit back and see if the market gets to that next level. In the meantime, we save ourselves some money. Aussie dollar, I need you to break this level. Come on, baby. This is going to be a very important level, this 88.27. I need to break that. And what I've been doing, guys, on the Aussie dollar again is I'm very active with managing this position I have on. I've been watching it on the range bar charts. I like to do my management off the range bar charts. If it would load up, I'd show you. Come on. So I like using these range bar charts. Same reason, because it's structured to trail stops. And you can see that I just trailed stops again. Aussie dollar's breaking up. What did we just do, guys? We just put in what? Another higher high, higher close here, right? I think we did. Higher high, higher close. Where can my stop loss now go? Somebody tell me. Higher high, higher close, outside return. Higher high, higher close. Stops can go what? Right beneath the previous outside return. So now my stop loss goes from right here, 87.53, up to this level. And we're not yet. And again, we're slowly, patiently, methodically moving it up. We had a great conversation yesterday in the live training about this, but we're not getting greedy. And it's important that you stay, I don't like looking at this number. I have it on there for, again, purposes of moving the stop up, but I hate this number will drive you crazy no matter what it is. Because this number doesn't show you what your profit is. A lot of traders make that mistake. You look at this number, you say, "Oh man, I made 151 pips of profit." You didn't. No, you didn't. You didn't make anything until you close out the position. So a lot of traders get in trouble, especially mentally, when they see this 150 and it rolls back down and now they're only up 100 and they start going crazy and they prematurely take the trade off or do all types of weird stuff to sabotage themselves. So my advice is, if you ever have a trade on, do this. Don't look at it. Don't look at the number, because it doesn't mean anything. It doesn't mean anything until you've closed out the position and it's in your pocket or in your bank account. It doesn't mean anything. So don't assume that you've ever made profit. Same thing with losses. Don't assume that you've ever taken a loss until that loss has come. We're looking at this on the other hand. I like showing you guys the good and the bad. Oh man, I lost 28 pips. No, you didn't. This trade's not over yet. Maybe for graceful exit traders. Nope, we didn't break and close above that level yet. You didn't lose anything yet until you're stopped out. Don't sabotage yourself. Don't, mentally know what you're going to do before you enter the trade. That way you can easily handle it. Where does 60.02 line up? Well, happens to line up at that same level on the daily that I thought we may see a bounce. See how it all comes full circle, guys? That top-down analysis. I don't trade off the daily, but you can use it for clues of where the market may go, what the market might do. And it's pretty cool when you go down to the lower time frames and you see this type of stuff completing at that same level. It gives you a lot more confidence in the trade. Because now you're seeing the same type of thing. You're seeing a potential bullish move on two different time frames, but for two completely different reasons. And if you're seeing it for two completely different reasons, how many other traders are seeing it as well? That's what we want to think about too. Remember, we can't move the market ourselves. Well, I mean, I can, but you guys can't. We can't. I can't. We can't. I was waiting for someone to type in "speak for yourself," Akil. But yeah, we can't move the market by ourselves. We need to be in a position where institutional money is trading. That's really the main level that moves the market. Institutional money. Institutional traders look for support and resistance levels. That's what they trade. and euro dollar has come up to our ABCD pattern. I'm waiting for us to come a little bit higher into our structure levels. I'm not really worried about this right here, but I am looking for that DSR level to hit. So in the back of my mind over there. But institutional traders looking for structure levels. That's kind of what we saw on the daily chart. We know also there are a lot of pattern traders that are retail traders, a lot of retail traders that trade patterns. But where we make money at is not being that super secret trader that finds a level that no one else sees. Because guess what? If no one else sees it, no one else is getting involved. If no one else is getting involved, there's not enough buying pressure or selling pressure to move the market, right? It doesn't make sense. Rather, we want to look for the levels that are obvious, right? You guys with me? We want to look for the levels that everyone sees. Because if I see it, and Ollie sees it, and Bill sees it, and Mark sees it, there's probably thousands of other traders out, tens of thousands of other traders that see it. And guess what? They've got orders coming in as well. Oh, that was awkward. They've got orders coming in as well. And we want to be in that order flow. We want to be in the market when that wave, when that momentum of orders are coming in, so we can catch the move. So look for the obvious. Don't look for the super secret area. Don't be that trader that has 15 moving averages on a chart and 5 different MACDs and Bollinger Bands and all types of other stuff, looking for a level that no one else is seeing. But pride-wise, it makes them feel good. Does it make you money? That's all that matters, man. I don't care about being the smartest trader out there. I'm far from the smartest trader out there. I just want to make money. So, yep, potential bat pattern down here at 60.02. What are we looking at for stops and targets? Well, stops, we know that stops need to be below our X leg. Our X leg is right here.